Yeah, we're just going to be talking about last time we spoke about net working capital, and we said net working capital is a current asset minus a current liabilities. We got a negative figure because the firm is not in a healthy position. But it's positive. Once the if your net working capital is positive, it means that your firm is in a good working, is in a healthy position, is in a positive position, is a healthy firm. Yeah, I hope you understand that. Now, today we are going to be talking about, let's dive in deeper into what balance sheet is all about. So we have an example over here that says, what is the shareholders' equity and what is the net working capital? And we have examples. You can be given this kind of table and you can be asked to create a balance sheet from this kind of table. So we're going to start from inventories. What is inventories mean? Inventories are goods held for sale or production. Goods held for sale or production, and they are usually current assets. So you place them in your balance sheet under current assets. Under current assets. Yeah, so they are usually goods held for sale or production. Number two is long-term debt. What do we mean by long-term debt? Long-term debt means borrowing and not due within a year. Yeah, borrowing and not due within a year. And there is a non-current liability. It's a non-current liability. You usually place them under non-current liabilities. Yeah, non-current liabilities. Yeah, any maybe bank loan due in 5 years, it could be your long-term debt. Number three is cash. Yeah, we all know what cash is. Cash is money. Money the company has on hand or in the bank account. Yeah, money that the company has on hand or in the bank account. Yeah, so they are usually current assets and it's the most liquid asset. Yeah, they're usually current assets and they are the most liquid asset. So account payables. Account payables are money the company holds suppliers. The money the company holds suppliers for goods and services that are purchased on credit. Goods and services purchased on credit, that is your account payable. Yeah, and it usually goes under current liabilities as well. Yeah, account receivables. Account receivables are money owed to a company by customers. Money owed. Now, account receivables are the company money the company holds suppliers for goods. While account receivable is money owed to the company by customers of goods or services. It is usually a current asset. Yeah, and the last one is a net plant and equipment. Net plants and equipment are usually property plants and maybe equipment. Equipment minus accumulated equipment. They are usually a non-current asset. So your inventory is a current asset. You put it in a current asset. Your long-term debt is a non-current liability, and your cash, of course, your cash is a current asset. Your account payable is under current liabilities. Your account receivables is under current assets, and your net and plant is usually under non-current assets. Yeah, so like I said, yeah, your cash is usually at the left-hand side, account payables, yeah. So that is how it's being placed, your fixed asset, net plant and equipment. Now, how did they get the shareholders' equity? Your shareholders' equity, which is this one, your shareholders' equity is usually your total assets minus your total liabilities. So when you subtract total assets, that's 248,000 minus 155,000, you get 93,000 as your shareholders' equity. So that's how they got this figure over here. Now, what's your net working capital? Yeah, we treated net working capital the last time. So net working capital is your current asset minus your current liabilities, which is 98,000, your current assets minus your current liabilities. Your current liabilities is 30,000. So 98,000 minus 30,000 is 68,000. So I hope you understand that.